A century ago, Argentina was counted among the wealthiest nations in the world. However, things have been different in the last 5 decades. Argentina is vast, and as you can see, it stretches from the east coast to the west coast of the United States, and in Europe it would cover from Portugal to Russia. Rich in natural resources and with a population of about 1/7 and a landmass of about 1/3 of the United States, Argentina has all the elements in place to be a regional powerhouse. The proud nation of European immigrants, mostly from Italy and Spain, was once at the forefront of economic development. But in recent decades, Argentina has been bouncing from one crisis to the next with no end in sight. Argentina's fall from grace is a stark reminder that no country is too rich to fall if it fails to invest in its human capital and create drivers of durable economic growth. In the 3 decades to 1915, Argentina frequently recorded annual economic growth of about 6%, and at the time it was the fastest growing economy in the world. Argentina's elite farmers took full advantage of global demand for their agricultural and cattle products by becoming the farm to the world and earning a sobriquet, rich como un argentino. Global market conditions were in favor of Argentina, and international financial institutions were ready to invest in the infrastructure necessary to support its export of agricultural output. Argentina's agricultural products were sought after in Europe and North America, and the nation's currency had international value. However, as agriculture technology developed, the real value and demand for Argentina's products continued to fall dramatically over the century. For example, the real prices of several agricultural products has dropped by as much as 80% over the last 100 years. Shifting global trade patterns, bad policy choices, isolationism conspired to cause Argentina to grow at a relatively slower pace between the Second World War and 1970, and then the economy outright stagnated for the next several decades as nations struggled with multiple debt and default crises. Most economists talk about the lost decades of Japan, where Japan's economy stagnated and wages stalled for more than 2 decades. But Argentina is suffering its version of lost century, where per capita income precipitously fell between 1928 and 2023. Argentina was in the club of resource-dependent economies and wealthy countries like Canada and Australia. But over the decades, these nations managed to stay prosperous by diversifying their economies beyond natural resources. Australia and Canada expanded beyond boom and bust cycles similar to oil prices, but Argentina still suffers from commodity cycles. The often talked about wealthy status of Argentina a century ago, when the nation's riches were held by a small group of elites, did not spread among a wider section of the society that could provide the basis for sustainable growth. Landed oligarchy ruled the nation and set priorities that focused on preserving the prevailing order and not developing the nation and a middle class engaged in manufacturing, industrializing, and innovating. Argentina is the only country that has the distinction of falling from a wealthy nation to an upper middle class income. In other words, agri-exports focused economic models survived several decades, continue to do so even today, for the benefit of the few and to the detriment of many. In the last 5 years, things have gone from bad to worse, and about half of its population is living below the poverty line. With inflation in triple digits, the living standards of most families are falling at the fastest pace in the last 6 years. Critics often assail Argentina's reliance on subsidized education, healthcare, and transportation services, largely funded by high taxes and public debt. Though these social programs are expensive for the treasury, they are not the key obstacles to the nation's achieving permanent prosperity. Argentinians have been accustomed to political and economic instability for decades, but life was manageable despite bouts of high inflation. But it was the rampant inflation in the last 2 years that spread voters' anger across the nation as citizens yearned for economic stability and struggled to make ends meet. Argentinians elected far-right libertarian economist Javier Miele as its president in late 2023, after years of rampant inflation, economic mismanagement, and the currency that keeps depreciating at an accelerated pace. However, policies proposed by President Miele are likely to make the situation worse for most Argentinians. and the new president's economic prognosis may be based more on ideological biases than historical realities. With inflation approaching 200% and more, and the poverty rate near 45%, it was not hard for people to select a new leader that could put the country on a different track. To most people living outside of Argentina, the country appears dysfunctional, corrupt, always at the mercy of foreign investors, and with an economy that barely functions. While many of these perceptions are valid, Argentina's economy has struggled in the last 12 years, but it is still the third largest in Latin America, trailing only to Mexico and Brazil. The economy has struggled to advance since 2012, and most families barely make ends meet. Rapidly rising inflation has ravaged the purchasing power and savings of its citizens. President Miele believes that dollarizing Argentina's economy, abolishing the central bank, and cutting government programs will restore economic stability, lift living standards, and put this beleaguered nation on the path of prosperity. Many believe that drastic cuts in government spending and dollarizing the economy will restore nation's standing in international markets and attract foreign investments to jumpstart the economy and create skilled jobs that are sorely needed. Cutting wasteful spending and eliminating corruption should be top priority for every government in any nation. But Argentina's problems run deeper than fiscal mismanagement and imbalances. What is most likely to happen if Miele is able to abolish the central bank, dollarize the economy, and let an American-style free market run in Argentina? With inflation that is on the verge of hyperinflation go away, and if central bank is abolished, will it create jobs, eliminate poverty, and close the gap between rich and poor? To understand these long-term economic challenges, let's start with Argentina's inflation and debt spirals. Argentina's fatal attraction to foreign loans is well known. Argentina, for most of its existence, has been running a federal government budget deficit, and nation's addictions to debt in foreign currency has been one of the critical catalysts for the current crisis. Argentina has defaulted 8 times over the last 200 years, and every bust following a boom has been accompanied by another increase in nation's overall debt. Inflation has become a permanent feature of Argentina's economic landscape, and public debt defaults, in other words, breaking contracts, dates back to 1890. Moreover, the government is addicted to borrowing huge sums of money in international markets to finance various infrastructure projects that rarely generate sufficient returns to pay back its lenders. Every boom financed by foreign money is always followed by a bust. When the money runs out, the cycle is repeated over and over again, as you can see in this chart. About 1/3 of its population, 15 million, lives in the mega city of Buenos Aires, and the rest of the country has seen little infrastructure development in the last 3 decades. Argentina's last economic default in the early 90s is well chronicled and understood by investors, but the nation's economy also enjoyed rapid economic progress between 2003 and 2018. Higher commodity prices and surging agricultural and animal products exports to China drove the economic expansion during the 15-year period. In fact, Argentina's annual goods export now hover over $90 billion and services exports close to $15 billion. Moreover, the country has been running a trade surplus of over $10 billion between 2019 and 2022. So why is the economy in such dire straits and the peso is in freefall? High inflation has been a chronic problem in Argentina, and things got out of hand in 2018. The number of factors worked against the country, some self-inflicted and others rooted in the COVID-19 pandemic. In 2017, the annual inflation rate jumped to 20%, trailing only to Venezuela. But to the surprise of the investors, central bank eased its annual inflation target to 15% from the previous target rate not to exceed 12%. The sudden relaxations of inflation target put investors on alert, and jittery international investors with thin trust in the government's ability to manage its finances look for ways to get out. In addition, the central bank lowered its benchmark rate to 28% instead of increasing it, sending another wrong signal to international investors with devastating impact on Argentine peso. The distant but fresh memories of rapid inflation and debt defaults only 3 decades ago reared their ugly heads, and foreign investors began selling Argentine bonds in droves, leading to the start of the deep decline in the peso that continues today. Argentina's addiction to foreign debt and persistent crisis of confidence among foreign investors are the root causes of the current malaise. Of course, if the government managed its finances and relied on domestic and not international bond markets, the peso would have suffered less, and policymakers may have had more maneuvering room. Once the exodus of investors started, the lack of political consensus and the onset of pandemic only made things harder as nations' foreign exchange began to dwindle rapidly. The government sought more foreign debt to pay for the previous debt in international markets, including an emergency loan from International Monetary Fund with stringent fiscal conditions. To make things even more difficult, interest rates, which once hovered below 2% in international markets, began to rise in 2021 after the U.S. Federal Reserve and the European Central Bank ended their nearly two-decade-long negative interest rate regime. Argentina was now paying as much as 10% of its budget in interest payment, and the nation was facing its worst capital flight. The deep skepticism of foreign investors and how Argentina is held to a different set of standards is even starker when one compares Argentina's macroeconomic data with other nations. Argentina's total debt to its gross domestic product is about 80%. The economy rebounded in 2021 after contracting in the previous 3 years, only to slide again in 2023. Argentina's annual budget deficit has averaged over 4.6% in the decade to 2022, slightly higher than the average in Latin America. Gross debt to nominal GDP for the US is over 120%. For the UK, it is 102%. For France, at 117%. For Japan, over 225%. For China at a whopping 286%, and for Singapore at 171%. So Argentina is not the only bad case out there. Moreover, one has to go back to 1965 to find international trade and budget surplus in the U.S. Yet the U.S. dollar is viewed by global economists and politicians as a financial standard to be emulated. This lopsided comparison should not serve as an excuse for Argentina's current economic and financial crisis. But when it comes to international credit markets, Argentina suffers from a trust deficit. Argentinian policymakers and politicians should have known this, and with 8 historical defaults, the nation should have steered away from borrowing in international markets. President Miele's dollarizing plan is one of the most controversial and damaging aspects of his economic plan in the long term. The dollarization in Argentina will fail beyond curbing hyperinflation, and the very people suffering the most will get hurt the most with the rapid rise of inequality and no new government spending. For sure, the dollarization will prevent frequent inflationary outbreaks and imbalances in fiscal and current accounts and stabilize exchange rate. But the plan will also increase inequality and not change countries' inherent competitiveness or lack of. No doubt, inflation will plunge from triple digits to near 5%. The jobless rate will surge to more than 12% from the current rate of 6%, and the labor force will shrink to below 15 million from 21 million. The obvious question is why? Well, because if dollarization is not followed by foreign investment, which is most likely going to happen, then economic growth will slow down. Energy and mining are the only 2 sectors that are likely to attract foreign investments, but they are both capital intensive and do not generate a lot of jobs. In short, dollarization will drive down the current rapid rate of inflation, but it will also lift jobless rate and poverty rate even higher, because at least 3 years will pass before private investment will increase exports and generate jobs. To assume that just because the nation is dollarized, foreign investment fund flows will swell is not rooted in reality. Just as Panama and Ecuador, there is a common misperception that dollarization will drive economic growth, increase per capita income, and create high-paying jobs. On the contrary, it makes economy more vulnerable to external shocks and heightens volatility for a country relying on commodity exports. We do not know if Miele's government will manage to pull off its dollarization plan, but if the nation manages to implement dollarization, Argentina's problems will not end. Miele is selling a dream that will turn into a nightmare for most Argentinians. What Argentina needs is an honest politician who tells the truth to Argentinians, that there are easy answers but no quick results or solutions, that at least one generation has to sacrifice to build the economy from the ground up. Argentina is having the same crisis over and over again because for one simple reason. It has the same economy that has failed to diversify beyond natural resources. That high-priced commodity export-driven economy worked because it was supporting only 6 million people in Argentina a century ago. With the population exceeding 45 million and real commodity prices continuing to fall, Argentina needs to focus on its most prized assets, human capital, which can provide technology-enabled services in international markets. What Argentina needs is an investment in education, preparing a labor force that is globally competitive, and aligning its economy to the euro area and to the U.S. through service exports, and ramping up teaching English and science and technology to its young people. Natural resource-driven wealth is far less durable than that created by well-developed human capital, as Argentinians discovered in the last century very painfully. The mineral-rich Argentina should be a wealthy nation, but most of the wealth is under the ground and need patient capital to extract it. But the true wealth of Argentina is above the ground, its people. Dollarization is like a painkiller. It works for a while, then the real pain returns, and you realize now you can't get off the... Argentinians believe that President Miele has a quick solution for their long-term problems. When dollarization fails to show quick results, no one should be surprised if President Miele is thrown out of the office in few years. Just look into Ecuador. What Argentina needs is a political consensus on basic economic policies and discipline, keeping the government's budget deficit to the gross domestic product ratio of less than 1.5%, severely limiting the government's ability to borrow in the international markets, and keeping its current account in surplus. If all politicians can agree on these three simple goals, growth will return, foreign and domestic investment will grow, and wages will rise in real terms. Argentina does not need a straitjacket to its economy and rely on the unpredictability of the US dollar printed by the government, which has its own serious fiscal problems. Argentinian policymakers rarely focus on the root cause of the government debt, which seems to only get bigger with time. Between 1870 and 1930, when globalization was in full swing, Argentina benefited by supplying agriculture products, cattle products, minerals to several European countries. Those exports provided a steady income to support infrastructure development and create jobs. But then and now, Argentina has failed to leverage its newly found wealth into industrializing and modernizing its economy. After the Second World War, Argentina gradually lost its ability to compete in the world market because of a lack of diverse economic growth drivers, and progressively lost its competitiveness to fast-developing Asian economies as the nation exhausted its ability to exploit cattle and agriculture-based economies. Exporting meat and agriculture products to Europe was the main driver of the Argentinian economy, and ever since that loss of locomotive, Argentina has struggled. Other resource-rich countries like Canada and Australia have managed to diversify their economy from farm and cattle to manufacturing and advanced technology and still enjoy prosperity, but Argentina has lost its way. Argentina's current export drivers are remarkably similar to those about 100 years ago. Wool, wheat, and beef has been supplemented with more agricultural products and other natural resources with similar booms and bust cycles. Argentina is not only willing or able to carry out structural changes needed to diversify its economic base and sell products or services to other large economies of the world, or locomotives just as Japan, Korea, China managed to do over the last 60 years by anchoring their economies to the U.S. Argentina has two natural advantages that fast-growing and well-developed Asian economies lack: its relative proximity and continuous time zones with the U.S. Targeting the U.S. economy and exporting services to the world's largest economy could create highest-paying jobs. Business processes, information technology, and construction services could provide a big boost to the job creation at home. Mandatory learning of American English language in high schools and colleges could make the process of acquiring professional skills and building a thriving service sector even easier. For the last several decades, the agriculture and mining sectors have been the two drivers of Argentina's exports, and the steady additional demand from China is a boon to shipments of commodities. But these sectors rarely create enough well-paid jobs. Lithium is often touted in Argentina as the next export driver and economic game changer, but the ground realities of these rare minerals are far from attractive. Argentina shares about 70% of the world's lithium resources with Bolivia and Chile, and could benefit from the rapidly expanding scale, or rather sale, of electric vehicles and battery-operated devices around the world. Lithium, dubbed white gold, is being eyed by mining and manufacturing companies in China, the U.S., South Korea, and Japan, as demand for battery-powered mobile devices, electric vehicles, and computing devices continues to soar. The lithium prices per ton has soared from less than $4,000 in 2013 to a peak of $81,000 in late 2022 before dropping down to $22,000. Argentina is estimated to have about 873,000 hectares suitable for lithium mining, and the nation is more attractive to international mining companies after Bolivia and Chile restricted lithium exports and the role of private sector in the minerals. However, lithium mining is not without its own problem, and much ballyhooed export potential is also limited, which will not help solve Argentina's job and economic growth crisis. A single copper mine can generate as much as $1 billion in foreign exchange, but a similar-sized lithium mine can barely produce $200 million. In addition, the lithium needs to be extracted through the evaporation process, which consumes huge quantities of fresh water and has the potential to pollute waterways with chemical contamination. Extracting 1 ton of battery-grade lithium requires 500,000 gallons of fresh water, which has already created extreme water shortages and impacted the availability of fresh water for local farmers and cattle ranchers. Lithium-powered batteries are supposedly considered green activities, but water-depleting and air-polluting lithium supply chains are anything but green. Moreover, most lithium mining rights in Argentina are handed out by provincial governments, and mining companies are paying only about 3% of royalty to regional governments, not enough to make a dent in the finances. In short, lithium mining is more likely to be environmentally damaging and not generating enough revenue for the nation. And what happens if the battery technology shifts to another chemical such as iron ions or sodium ions? As the demand for cheaper battery-powered vehicles and devices rises, the focus will shift to cheaper battery materials in the next decade, making most lithium mines less attractive. Lithium boom of the past decades could go bust in the next decade. To create a growing and sustainable middle class, Argentina needs to diversify into exporting professional, skill-driven services to the U.S. and other wealthy nations, and take advantage of its multilingual young population. Argentina has the potential to create as many as 2 million jobs and exports at least $50 billion in professional and information technology services to the U.S. and Eurozone. In the past, people in Argentina have looked to Italy and Spain for professional advancement or business opportunities, or simply to emigrate to these nations because of their cultural and family ties. But Argentina and Argentinians can do better by developing the nation's economy driven by high value-added tech service export to the U.S. and to the European Union. Spain and Italy do not have the economic scale and dynamism, but by mastering the American English language, Argentina can create a sizable service export economy. Unless Argentina anchors its economy to other large economies and carves out its slice of the world or the service market, the nation will continue to lurch from one crisis to the next. President Miele can cut government expenses and dollarize the economy, but these measures will not create a middle class that will power durable economic growth for decades to come.